Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having posted three impressive candles, the market cleared that 60-day moving average last week. However, the doji gave a little bit of indecisiveness and a bit of profit taking appears to be coming back into play as traders trim slight gains from earlier last week as the US dollar index refreshed its lowest level since November 2024 at 103.60. This followed Federal Reserve Chairman Jerome Powell's reassurance of a strong economy and no urgency for rate adjustments. Despite a late session recovery, the index still logged its worst week in months. Speaking on Friday, Fed Powell emphasized that the Federal Reserve could wait for more clarity on the government's policy impacts before making monetary policy changes. He noted that the Fed's policy committee is focused on separating the signal from the noise, highlighting a solid labour market and inflation moving towards the 2% target. The costs of being cautious are very, very low, Powell said. Meanwhile, investors brushed off a weaker than expected February jobs report on Friday, the first under President Trump's watch. Non-farm payrolls increased by 151,000 in February, falling short of 170 forecast according to the US Bureau of Labour Statistics, the BLS. The unemployment rate, however, ticked up to 4.1 from 4%. So turning to the technicals, and the 60-day moving average still remains somewhat intact, as we can see here around 62.70. I feel there is further gains this week, which could see the market rally on somewhere towards a region of 64 to 65 cents in the broader call. Any weakness, though, as I mentioned, should find support anywhere from 62.60 to 62.85. Turning to the euro, well, we've seen an impressive bull run and still not quite pulling back as the market looks towards 109 as the dollar index, as I mentioned, dropped to lows around 103.60. With quite a week for scheduled events, key economic data includes the US February CPI, which is expected to show cooling price growth, and Germany's inflation, which is seen stabilizing. With the market still appearing to be taking some profit given the fact this rally is very, very impressive, towards the region of 109.5 to 110, I feel could get a little bit to the heated side as we are overbought. And do be on your guard because look at this candle here. Back in November, it did post a huge fall. It was all cheers last week as dollar yen crushed the level of 148.70, which has opened the way towards the region of 144 as a potential target seen from the weeklies. In light of how the market is positioned, though, we may see a little bit of profit taking, and it's going to be a little bit challenging due to the fact is markets are still a little bit nervous about being short underneath 148. But overall, though, given the way the weeklies are and the strong ADX, I still hold the call and the engulfing candle on a weekly bias. I still feel 144 is achievable. Turning to sterling, well, since reaching its topside target of 129, given from the inverse head and shoulders, the market for myself is neutral as I feel the topside target has been reached and now time to reassess. For those still trading, still be on your guard in case profit taking could send the market back towards 127. Wrapping up with commodities, the market is still relatively firm as it looks towards the topside region, somewhere around 2,930 to 2,950, and the broader call still holding at $3,000 an ounce. Any weakness? Well, I still find the market may show demand, and that is from 2,880, and the base seen around 2,850 to 60. And oil, well, I'm still a little bit neutral given the recent break to the downside, but the market is still trying to determine its trend. And at present, it may be somewhat bearish, but overall, though, the bulls are still determined to hold above this level of 65. I would like to see further strength come back into play here, and a clearance of $68 may actually see a rally on to 71. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the new week.